It is time now for the word on Wall Street. Top investors watching your money. Joining me now is Verdence Capital Advisor CEO Leo Kelly. And also with me here on set is Mark Tepper. Leo, starting with you today, I want to take a look at futures as we get ready for some more data today. You've got the Dow up 64 in the pre-market right now. NASDAQ, S&P higher as well. We rebounded yesterday after August cooler than expected CPI report. And then we've got PPI today at 8:30. So here are the expectations. Economists expecting month-over-month prices to rise 0.1%, 1.8% year-over-year. Leo, how are you feeling about the data thus far? Your initial reaction to CPI yesterday, and then how does PPI play into the overall story today for you?
I think you have to look at trend, and trend has been positive for inflation. We've said many times on the show that the Fed is going to get what it wants. We get a little nervous when people are rooting for outcomes, hoping for the outcome they want, and I think there's a little bit of overzealousness in rate cut expectations. But I do think the good news is that inflation has cooled. I think the Fed is in a good position, provided they don't get too aggressive in the next meeting.
All right. So obviously we're going to be waiting on that decision. The overall expectation, a quarter-point cut from the Fed. Some, like CEO David Solomon, Goldman Sachs, say maybe you could get a half a point, but we shall see. Mark, let's look at Nvidia this morning, something that we always talk about with you. The CEO, Jensen Huang, says the scramble for a limited amount of chip supplies is frustrating some customers and is raising tensions. Talk about this.
I would have to say that's probably a good thing for Nvidia and any AI chip makers overall, because the reason these customer relations are tense is because they want a heck of a lot of chips from the Nvidias of the world, AMDs, companies like that. But when you think about Nvidia, I mean, you know, there's a lot of people who've been critical of the valuation, you know, having a market cap of over $3 trillion, but you know, when you look at the growth prospects of the company, it's actually not, it doesn't look very expensive. The forward PE is right around 34. I think the forward PE of a company like Apple might be around 31, 32. And Nvidia is expected to grow over the course of the next 3 to 5 years, like 5 to 6 times as quickly as Apple. So, you know, obviously a big company. We need Jensen Huang to come out maybe once a week and talk about how there's so much demand for these AI chips, because that really ignited the rally. But Cheryl, one of the things I've been talking with clients about is, you know, Nvidia is now a household name. Pretty much everyone has heard of Nvidia, and you either have it in your portfolio or you don't. But I've been trying to tell my clients, take your blinders off. Use your peripheral vision. This is not the whole AI race. It's not just about Nvidia. There are other derivative plays that are going to benefit from AI, whether it's software, whether it's we need more cloud, whether it is data centers. You might want to own some data center REITs, nuclear energy to make sure you're getting the power to those data centers in an effective and cost-effective manner. So, you know, I guess the best advice is just to be, you know, use your peripheral vision as it relates to AI.
And Leo, you say we've got more volatility ahead.
Absolutely. I think we have more volatility ahead. I also think, I think the market's going to be disappointed with the Fed. M2, the measure of money supply, has been going down, which has helped inflation. But in the last 5 months, it's starting to creep back up again. So we have an economy slowing faster than I think people would hope. M2 is rising. That's going to limit the Fed's ability to get too aggressive, and I think the market might be a little disappointed. I think you combine that. I think you combine that with some elevated valuations, and we'll have volatility. The good news, Cheryl, is in that volatility, there's opportunities to put money to work. Cash is a very valuable asset right now. We're not necessarily going after the Mag 7. They haven't come down enough. They're still elevated. But there is value out there, value in U.S. Large cap value, but also the international stocks look very inexpensive. International developed 2 standard deviations below the norm. Whenever that happens traditionally, there's value there.
Interesting.
So I think if you're discerning and you're not just caught up in the hype, just as this dark conversation today, Nvidia, if we start to look, as Mark said, past that one name, there's value in the market. Be patient and be disciplined. You can make money coming out of this stretch of the inflation market we've seen over the last 2 years.
And Mark, you also have been watching wages. And that's been important to you. It's been watching that wage story.
Yeah, I mean, look, I mean, the wages obviously, you know, throughout the Biden-Harris administration have been rather weak. I mean, real wage growth is actually slightly negative. But we obviously, if we want to have a strong consumer, you know, we need to have wage growth exceed inflation. Fortunately, it looks like, you know, inflation readings, even though, you know, this week's was a bit higher than expected on the core side of the equation, it seems like they're more under control. And I think the Fed obviously is really going to be focusing more on that other mandate, which is full employment, because, Cheryl, the labor market has been softening, specifically with small businesses over the course of the last 2 months. If you look at the ADP report, they have cut jobs. Companies with 49 or fewer employees have cut jobs over the course of the last 2 months. They employ 50% of our economy. They generate 50% of our GDP. We need strong small business as well.
All right. Well, obviously, we've got that inflation data that's coming out. We've got about an hour and 10 minutes to go. We'll see if that moves markets. Leo Kelly, thank you for being here this morning. We appreciate it.